And Markway was right, top of the hour, and I'm here with updates from the world of business. Good morning, everyone. It's our first round of 55 minutes of current and relevant business talks. That's what we do on Business Morning. Yes, you get about the market and others. I wish Markway was here. I know she's also gunning for the holiday tomorrow, but she has no choice. We have to be back here. Business from the global scene, where oil prices extended gains on Thursday and the prospect of tighter supply after Washington imposed further sanctions to curb Iranian oil trade, and as some OPEC producers have pledged further output cuts to compensate for pumping above agreed quotas. So for this morning, we see Brent gain 34 cents. That's about 0.5% at $66.19. I wonder if this increase is steady. We've seen it go 64 to 65, and now we have it at 66. WTI, on the other hand, is also up 0.7%. $62.91 a barrel. Both benchmarks settled 2% higher on Wednesday at their highest level since April 3, and are on track for their first weekly rise in 3. Thursday is the last settlement day of the week ahead of Good Friday and Easter, so it's major trading day is back till Tuesday. President Donald Trump's administration issued new sanctions targeting Iran's oil exports. That happened yesterday, Wednesday, including against the China-based Teapot oil refinery, ramping up pressure on Tehran amid talks on the country's escalating nuclear program. So on the other hand, we have seen China is also targeting U.S. services. So the battle is on, unfortunately, and every other country will be paying for it. Then we come to Nigeria, and yesterday a bit of reprieve for consumers of petrol in Nigeria, because we saw the ex-depot price of premium motor spirit from Dangote refinery reduced again. The price is now 835 naira for a litre. The move, which comes ahead of the Easter break, which starts tomorrow, marks a 15 naira drop from the 865 naira lower cost of the commodity, which was announced on Wednesday last week, and it's the third downward adjustment in 6 weeks. A statement issued by the refinery on the reduction also mentions that the high-quality petrol will now be available at various prices across 6 of its key partner outlets in the country. We know them: MRS, Adova, Hayden, Optima Energy, Hyde, and Techno Oil. The company says it expects that this latest reduction in PMS prices will generate a positive ripple effect throughout various sectors of the economy and provide the much-needed relief to customers, contributing to broader economic growth, particularly during this Easter season. So those are the outlets where Dangote refined products, would be sold: MRS, Adova, Hayden, Optima, Hyde, and Techno Oil. Now, bigger issues now outside Nigeria. The World Trade Organization has issued a fresh warning over the global economy due to the impact of U.S. President Donald Trump's tariffs announcement. In its latest Global Trade Outlook and Statistics report that was released, the 166-member intergovernmental organization says the volume of world merchandise trade is now expected to decline by 0.2% this year, before posting a modest recovery of 2.5% next year, 2026. And this based on the tariffs currently in place. So if it gets any harder, then we could have more cuts, and including that 90-day pause. The WTO explains that the outlook for global trade has deteriorated sharply due to surge in tariffs and trade policy uncertainty, and warns that severe downside risks exist, which could particularly hurt export-oriented and least developed countries, unfortunately. The Nigeria Sovereign Investment Authority has announced that it has secured a net asset value of $2.8 billion as of December 2024. Speaking during a breakdown of the 2024 earnings, the managing director of the authority, Aminu Umaru Sadiq, explains that the feat is as a result of its resilience.
all the way from February, when we set up Green Guarantee Company alongside FCDO, alongside GCF, alongside Norfund and USAID, through to December, when we were selected to host our peer sovereign wealth funds, our peer African sovereign wealth funds in June of this year. It has been an action-packed year. You can see we made progress on ARENA. You can see we launched our Ministry of Health Oncology Initiative, where we are trying to build one oncology center, world-class, in each zone on behalf of the government. We signed groundbreaking MOUs through Ripple, Renewable Investment Platform, MPI, Price for Innovation. The entire year was action-packed in terms of the infrastructure space. On our results, you can see both on a core basis and on a non-core basis, the increase of our returns in 2024 relative to 2025 has been significant. Where we were at 165 billion in terms of core TCI in 2023, we are at 407.9 billion in 2024. This increase of 150% on a core basis, so when you strip out the impact of FX gains, you can see that even on a core sustainable basis, we increased our returns by 150%.
Come the last week in May next month, the African Development Group would be choosing a new leader, a new president. I know by now Africans are used to Dr. Akinwumi Adesina and all the work that he does on the continent and also relating even with Africa. Remember, even just last week, we had him on our sister program, Sunrise Daily. Well, his tenure comes to an end by next month. And of course, there are candidates who wish to take up the responsibility which he's been holding. So we're speaking to one of them today on the program. He's Dr. Samuel Maimbo. He's the candidate, or one of the candidates of the presidency of AFDB. Joins us from Lusaka, Zambia this morning to share his vision and plans. Dr. Maimbo, good morning and welcome to the program.
Good morning. Thank you very much for having me. This is very timely.
Yes, obviously it is, Dr. Maimbo, but I must tell you, expectations are really high because Dr. Akinwumi Adesina has really left, or is going to leave, very big size of shoes for you. I wonder how prepared you are to fill in those big shoes that he's left on the continent.
Absolutely. President Adesina has been a larger-than-life character on the continent. And I've always seen the leadership of the African Development Bank as a relay race. My responsibility is to take on that baton with humility, with ambition, with a sense of urgency to reflect the Africa we find ourselves in. There is a lot taking place globally, as you've just rightly mentioned in your global program. My responsibility is to make sure that the African Development Bank continues to be run as a first-rate global institution, that we tackle the challenges that governments across the continent are facing regarding debt, regarding financial management, and most importantly, the challenge of growing the continent as quickly as we possibly can. We must learn to trade with each other. We must increase our investments in agriculture and create the jobs that our young people expect at this time.
Yeah, well, it's good you mentioned trade because we know that is very sensitive at this time. And, you know, WTO has told us how much the global economy would be losing at the rate of the trade tariffs that we have now. Of course, if it gets any worse, then the loss will be even more. And Africans have been challenged to take the bull by the horn at this time, reduce dependence, and look inward. So I wonder what strategy you bring on board, you know, to calm the nerves or maximize the opportunities for Africa at a time like this.
One of the most important things to keep in mind is that development is a long-term game. And as much as we will experience pain in the short term, it is absolutely fundamental that as quickly as the tariffs are going up everywhere else in the world, we are bringing them down here in Africa.
Sorry to
trading with
interrupt
each other
you.
more.
Sorry
We're
to
bringing
interrupt you,
down
Dr.
our
Maimbo.
borders. What's very clear
Dr.
today
Maimbo,
is that
I hope you can hear me.
to implement the Africa Free Trade Agreement. We've got to do it.
All right, Dr. Maimbo, let's just take a minute off the program.
Yes, please.
We see that your network seems to be fluctuating. So we'll just take a minute so we sort that out and try to come back on the program with you. So perhaps you have to log off and then log back in, but we'll see what we can do here. So we'll just take a break now and then we'll come back to continue this conversation. Please stay with us. You're welcome back. We do hope that the network will be more friendly with us now. Dr. Maimbo, can you hear me? I hope we have a better connection now.
I can hear you loud and clear.
Awesome. So you were talking about the need for Africa to look inwards, and you mentioned the AfCFTA.
Indeed, I was stressing the fact that we no longer have 10 years to implement the Africa Free Trade Agreement, that we must focus on implementation right now across the entire continent. As quickly as the tariffs are going up everywhere else in the world, they must be coming down here. But we must keep in mind that trade amongst ourselves is not just about what happens at the border. It's about how we negotiate our contracts collectively, how we ensure that people we're negotiating with realize we're a 1 billion people market that is the youngest one in the world, that's going to continue to be a working population for years to come.
Yeah, and then you also have, of course, some plans which are already in place. For instance, in Nigeria, the AFDB is working on the agro-processing zone because we realize food security and electricity. I know there's the program between the AFDB and the World Bank. These are measures that would help Africa to maximize these trade opportunities and intra trade routes.
Absolutely. There is much to be proud of about the work that is currently taking place on the continent. The increase in the number of special processing zones is absolutely the right thing to do. My focus will be scaling up all of our investments so that we do it at pace and scale. We must integrate the special economic zones with a clear strategy to link our ports on the continent. As you rightly pointed out, this requires significant investment in energy. Without energy, we will not be able to create the jobs that we want. A key element of the investment in energy, and I'm actually quite delighted with the work that has been done between the World Bank and the African Development Bank with M300. Our challenge is to make sure that the regional power pools that we have in Southern Africa, in East Africa, in North Africa, West Africa are connected. We must create one energy pool across the continent. That's the only way we reduce the cost much more effectively. And importantly, that's how we ensure that we're adding value to our products as close to their source of origin as possible. That's the
Well, I hope we can get Dr. Maimbo back. Certainly a whole lot to try to thrash out with him as he contests, to become the president of the African Development Bank Group, which we know, of course, is a huge responsibility, especially at this time on the continent. He was just talking there about the issue of infrastructure and power and getting Africans to trade among themselves. But of course, we also have the challenge of, for instance, the Sahel states now have a tariff against ECOWAS. So you have some of those political divides that sometimes hinder, apart from the infrastructure, which has been there for decades, that also hinder, some of those. I see we have Dr. Maimbo back. Are you back, sir?
I can hear you clearly. Your team has disabled the visual, but I like the fact that you have emphasized what is happening between our regional blocs. it is absolutely essential that we take lessons from all of the regional blocs across the world and what they have been doing. It's not just the tariffs, and I must stress this because tariffs are one point in a long series of value chain decisions that are made. It's the decision about what products you emphasize within your regional bloc. It is about how you negotiate with other blocs, and how you, and here I'm not just talking about the blocs on the continent, I'm actually referring to the blocs globally as well. The rules of global trade are being rewritten as we speak. And it is absolutely essential that we have a strong African Development Bank representing and working with governments today and negotiating and making sure that Africa's voice, Africa's seat at the table is strong. This is also a reminder that economics and economic development is also a political process, which is why it was important for me to go and meet with the African Union chair, congratulate him on his appointment, and emphasize that in my view, the African Development Bank and the African Union are two sides of the same coin that must work together to tackle some of our most challenging, most significant challenges that we face today. Inevitably, we must grow our economies. We must make sure we're not leaving anybody behind, not women, not young people, not anybody who has been affected by conflict on our beautiful continent.
Yeah, well,
Thank you.
Yeah, and we all know that you can hardly do or record economic growth if you don't have stability politically and with your trade partners and your neighbors and all of that. So that's one thing. But you talked about inclusivity when you talked about women and children. And we know on the continent we have a huge percentage of informal sector. Sometimes it does seem like they are cut away from government policies even in their country, but when you talk about region or blocks, then it seems they are further away. How do you hope to bring them closer? Because you do need the private sector, the informal sector, if you want to make progress on the continent.
You're absolutely right. In the more than 20 years that I've been working in development, I've worked in some of the most challenging places in the world. I've also worked in economies that are largely informal. A fundamental rule is that we very rarely have the privilege of working in an environment where what we learned in our classrooms applies immediately. I've always worked in the realm of third and fourth, fifth best solutions. We must be creative. The good news is there is no more entrepreneurial, enterprising class than the SME that you find on the African continent. They navigate risks in ways that are unbelievable. They deliver on their products. What they need is a helping hand with finances, with regulation, with access to markets, with fundamental basics of energy and infrastructure. So the 3 points I would stress is the needs of the SMEs are just the same as the large corporate enterprises. They're just at different scale. So let's double down on making sure that when we're putting large trunk infrastructure on energy, that energy is delivered to retail communities right here within our cities, within our rural areas, because the small enterprises benefit. Secondly, when it comes to financing, it stresses the fact that the African Development Bank must partner with other African financial institutions across the globe as well as within country, because they will have the reach to the SMEs that they need. Third, it's about government policy. It's about consistency of that policy. One of the challenges SMEs have is when policies vary from time to time, it's very difficult to navigate. So I advocate very strongly for governments to adopt a policy. It's very difficult to design the perfect policy. Don't stress too much about it. Just have a decent policy that you stick with and apply for a very long time. But a critical function that multilateral institutions must play in this type of environment is creating the links for SMEs with larger firms and those firms to even larger firms. Those are the relationships that make a difference when it comes to SME development on the continent. And it's absolutely essential, as you rightly pointed out, because they employ the vast majority of our people. They drive a lot of African economies, and they give us the shock absorbers that make sure that when crisis comes, we're able to bounce back over and over again.
Yeah, so in achieving this, Dr. Maibo, you have to deal with politicians. And I mean, on our continent, politicians have, certain attitude, which sometimes, as you noted, getting the policy implemented down to the grassroots where it's really needed could be difficult. I wonder how you plan to handle this.
In the same way I have been handling it over the last 6 to 7 months that I've been campaigning for this position. I've always learned that a politician is a human being with very clear interests of what he wants to achieve, either for himself or for his community. It's important you understand that. The good news is that as I have gone the full length and breadth of this continent, we have a generation of politicians who know what they want to do for their communities, who have seen what is taking place globally and know that the cavalry isn't coming, that the solutions are going to be homegrown this time round. There's a generation of politicians who realize that our young people today have access to social media that has made politics more transparent than it used to be. You can no longer go through a political cycle, make promises that you cannot keep. Politicians are being caught out on false promises. And therefore, the pace at which I've been able to settle very quickly with politicians right across the continent on the work that needs to be done in agriculture, in infrastructure, in energy, in trade, has been exceptionally reassuring. And that is why the message I've been sending about this being Africa's time has been resonating with politicians. That said, as important as they are not the only community in this development race, which is why in every city I meet young people, I meet the private sector, I meet civil society, and making sure that we have basic agreement on what it will take for us to develop is the work of every candidate in this race, will be the work of the next president as they pick up the baton from President Adesina. A sense of urgency is what's creeping into development. The transition from an aid-based model to one that's private sector-led model, that's the stuff that excites me. And this is why speaking to you is important, because in whatever scenario you can think about, Nigeria is central to Africa's development. The resources, the financing, the brain power that Nigeria has, that has to be unleashed on the rest of the continent. Nigeria is an important constituency for the African Development Bank, and is going to remain one for years to come.
Yeah, thank you so much. That makes me feel good being a Nigerian, but it also puts you...
You absolutely should.
Well, it also puts you in a difficult situation, which I think Dr. Adesina had to face, and I believe managed, well. Because, for us Nigerians, when we see our people anywhere, we expect the whole attention to be on us. I don't know if it's that way with your people also. How do you, being the president of AFDB, that's supposed to be like the parent of all the countries on the continent, how do you balance it so that one country doesn't feel left out, or your country of origin doesn't have too much attention compared to others?
I don't think that's a difficulty at all. I think that is something to celebrate. The diversity of this continent is amazing. When I have lots of Nigerian friends, and we joke about the difference in personality, the difference in energy, but that's what you need to grow. Every single team that I have led, my #1 goal is to make sure that my leadership team reflects the diversity of my constituents. And therefore, the diversity of the leadership team at the African Development Bank, to make sure we have people from right across the continent, is front and center. Every single community wants to see their own community grow. My Nigerian friends might just be much more vocal about it, but trust me, my quiet, reserved Zambians are just as eager to get the same amount of development for their children and grandchildren. That's a diversity we must celebrate. The differences in language right across the continent, our access to a deep history gives us fundamental building blocks for us to grow as a continent, which is why when people talk about the digital dividend, when they talk about AI and what it will do for development, as Africans, we must pause and ask ourselves difficult questions. #1, do we have the energy and infrastructure across the continent to make sure that we can compete with the rest of the world? How are we making sure that when we use technology such as large language models, are those models taking into account the rich history that Yoruba has, the rich history that Zulu has? If we don't do that, yes, we will get quick answers within seconds, but those answers are based on a culture that does not reflect our full diversity. It's therefore incumbent for the African Development Bank, whenever we hear something exciting, such as AI, digital technology, to reflect on where we are as a continent, to make sure that our history, our culture, our experience is embedded in that technology. We must invest in technology firms that are African-born, African-led, building on that infrastructure. We must be updating our curriculum. When we talk about youth employment, it's not just about creating jobs when these kids are 18, 20. It's about going back to see what their curriculum is. I want someone to be talking about interest rates as, much earlier in their career than we currently have right across the continent. So, my dear Nigerian sister, I celebrate the level of energy and the level of voice that Nigeria brings. This is exactly why I said Nigeria is central to what we do in Africa. That's how we grow. We grow by making sure that those economies that are robust are flying as fast as they possibly can.
All right, thank you for celebrating us. We celebrate you too. I mean, because Zambians, even in your calm ways, and other Africans, you also have your energy and you bring your spice. So how would you describe your leadership style? Because I want to believe, as expected, a lot of people will be comparing you to Dr. Adesina, at least in the first few. Hopefully, you're the one that's going to be there. The first early days or years of attaining an office, you're always compared to your predecessor. Or if it was Dr. Adesina, this is what he would have done. This is how he would have approached it. So as you prepare, to take up this responsibility, if you win, we wish you the very best, obviously. What would be your leadership style? What do you think will make you outstanding amidst other candidates?
For those who want to spend time comparing me to President Adesina, they will have plenty to talk about. He wears a bigger shoe size, he's taller than me, and there's plenty that we can discuss. My leadership style is simple. It's about rolling up my sleeves, making sure that we are getting to the core of the issues that need to be addressed. It's about having honest conversations. In most of the meetings that I have led, I literally designate one person to criticize everything that we discuss as a group. There is strength in diversity. There is strength in exploring different options. My leadership style is about empowering people so that you will always hear more than one voice from my team. And those people who are entitled, who are given that voice, will find that I will hold them accountable. We will discuss realistic targets. I want to discuss results. That's my happy place. I want to make sure that I build on the legacy that President Adesina is going to leave us, to focus the institution on implementing the high levels of ambitions and expectations that have been led. In simple terms, I have an inclusive leadership style. I have a transparent one. I have a results-focused style. And I always talk about what have we done in every conversation. And finally, and most importantly, I'm not shy about making mistakes. I'm not shy about learning from the past, because development is messy. There is no perfect solution, but there is an option for us to put our best foot forward every single day.
All right, Dr. Samuel Bembo, candidate for presidency of the African Development Bank, we certainly wish you the very, very best. And I know by the final day of this month, we would know the result. We certainly wish you would be the one there with a smile on your face, and we'll be smiling with you.
Thank you very much. I look forward to coming to Nigeria and celebrating with my Nigerian brothers and sisters in the only way Nigerians do, which is celebrate big. Thank you very much for your time.
All right, thank you too, and wish you the best.
Bye-bye.
All right, so that's it. Let's take a break now. When we come back, it will be time for commodities. Good news in the air. Cheaper petrol for you. We'll find out how cheap, and perhaps it will not be a short one. It will be for long term. Talk to us later. Welcome back to watching Business Morning here on Channels Television. And yes, Dangote refinery has further reduced the ex-depot price of PMS, and that should trickle down to the pump. Let's talk to economist at financial derivatives company, Mr. Clemency Gbanugo, to see how much we can expect. Mr. Gbanugo, good morning. Welcome to the program. Are we going to buy petrol at 500 naira very soon?
Good morning, Amy. My pleasure. Yeah, no, well, we've been there. Of course, you know, we are now in a new normal, away from where we used to be, where petroleum product prices were fixed. So with the deregulation of the downstream sector, what is clear is that Nigeria is now more integrated with the global oil market, especially in terms of pricing of petroleum products, right? But this comes with risk, both risk and opportunities, right? In April, in March, Dangote raised the price of price of petroleum PMS petrol, and in April it brought it down and brought it down again. That's twice in April, right? And what is this telling us? Two things. Of course, you know that the petrol or PMS is one product in Nigeria that is quite highly politically sensitive, because you see people campaigning around it. If you shift or move the prices of petrol, you begin to have a lot of public outcry and backlashes. And then it's also price sensitive because most of the households and small businesses are relying on this as a source of energy. Remember, electricity coverage in Nigeria is about 60% of the population, and that is 6 hours of electricity per day on average. So about only 20% of the population could be having as much as 12 hours a day. And the informal sector depends on this as a source of energy, remember? And this informal sector contributes as much as 120 trillion of our GDP. So that is very price sensitive. Whatever happens to it has an impact on consumer welfare as well as on businesses. So that said, I think we're going to begin to look beyond this, because if global oil price declines, price of petroleum products is expected to come down. But remember, it's going to have a bite on revenue. And if global oil price goes up, price of petroleum products will go up in tandem, but it's also going to have a positive impact on revenue. So the question now is, how are we optimizing these new dynamics to ensure that we minimize economic disruptions?
So saying that things will come down, I mean, the other time we had a reduction in the price of petrol, we didn't really feel the difference in transport and in food. Perhaps, is it the time lag that's required, or how long is it supposed to take for it to reflect? Or is the difference too minute to be passed down, you know, to commodities and transport?
I think I'll look at it from two perspectives. One is lag, number two is expectation effect. If there's a decline in the price of petroleum products, if the market is expecting that this is temporary, then you know the shoe leather effect. You wouldn't go and begin to change your prices. You want to wait and see whether this has come to stay. Second is making decision on price changes sometimes also take a lag to implement. But very importantly, Amy, is the magnitude. So if you reduce fuel price by 10 naira, will transporter now reduce his transportation charge from 1,000 to 500 or 800. So it depends on the magnitude of that change to be able to see that move. So we have magnitude, we have lag, and we have expectation effect acting on those price movements.
So I wonder what the perception is now. I'm seeing that the drop in the price of global oil is because of the trade tariff, especially what's going on between the U.S. and China. So, well, there are talks that eventually one of the presidents would have to blink, even though we don't see that now. China is now attacking the services by U.S. with tariff, obviously, and President Trump hasn't showed signs of blinking, at least when it comes to China, even though he has tapered a bit when it comes to the war. So what perception does that give that, you know, to oil prices or oil demand, which is what is controlling the prices? do investors or does the economy see possibility of prices coming back up, or is this the level we think we will live with for most of 2025?
In the entire global geoeconomic order is changing, and it's changing very fast, right? For oil prices, our expectation is that oil prices will remain bearish for 2025. Well, the global economy is navigating uncharted waters, and sometimes it becomes very difficult to predict. But look at the issues here. Yes, there's a sanction on Iran, in terms of their exports to China and all of that. And this is the sanctions since President Trump came on board. But these are the issues. One is supply. Before, it used to be OPEC that holds the ball, right? Now we're seeing a shift where the non-OPEC countries are supplying more. The non-OPEC countries used to account for 60% of global oil supply. Now they're accounting for 70%. And do you know that this year is expected that these non-OPEC countries are going to increase their supply by about 1.8 million barrels per day. OPEC countries will only increase by 100,000 barrels per day. So this oversupply that is coming from this other end, the non-OPEC, is going to put a downward pressure on prices. And now we're talking about demand. China is the world's largest consumer of crude. We are having this uncertainty, the trade war, right? And the growth momentum in the U.S. is being projected to be depressed. That of China the same, because in environment of a global trade war, there's no absolute winner. All right, the global economy will lose. So the global trade that was before, earlier in the year, projected to grow by about 3%, is now being projected to contract by about 1 to 2%, and that is going to put a downward pressure on demand. So you have supply going up, you have demand moderating. That is a bearish price for crude oil, and here we are. Nigeria's break-even oil price is about $60 per barrel. And today we are 65, tomorrow we are 64, and then we are dangling that way. It means that we really need to roll up our sleeve, because that is the pressure on fiscal earning. But much more is on FX. I'm even getting more worried on FX, because in 2024 and the January, February, we had that portfolio inflows, and we are happy, the honeymoon, and the money we are coming in and flowing in. In fact, in January, we had portfolio flows of about $2 billion. In February, it's the same, about $2 billion. But do you know, in March, it came down to about $600 million sharply, with even offshore sell-offs. And that is the pressure you are seeing on the Naira. So with the global uncertainties, as we are seeing it today, and investor sentiment faltering, we are actually working on eggshells, and we need to do much more to keep ourselves above the waters.
Yeah, I think the eggshell gets even worse, because we see threats to our crude production, even though the target is about 2 million for 2025.
We're doing 1.4.
Yeah, we saw a drop, and then we see more threats in the Niger Delta to our production. It does seem like the issue of vandalism and theft, and then, of course, the disruption, the protests that we've had in Delta State this month also. So the numbers, well, may go down even more. And that's why we see it in the FAC. We saw FAC released, and we saw it drop for a third month. What threats do this, the drop in crude production, the drop in global oil prices, which of course leads to the decline in FAC, what threat does it bring to the Nigerian economy? And perhaps there can be a hedge, if at all.
Yeah, thank you very much. The way I'm looking, I was having a conversation a few days back, and we're looking at the the calm, all right, the stability we have this year so far. And I describe it as a fragile calm, right? Because we look at this what we call calm now, but the fundamentals are actually very disturbing, right? Because you are talking about, one thing is to have a success, another thing is to sustain it. We have made tremendous success between 2023 and 2025 in terms of ramping up oil production, right? But the question now is, how do we sustain it from where we are today? Because for the past 3 months, oil production has been declining, and there are more indications that the risk is to the downside. There are more indications that the oil output will remain depressed. And remember that up till now, with all the campaign we have been doing about non-oil export as a source of effects, oil and gas is still contributing about 90% of our of our export earning, and we don't even have the sustainable foreign capital coming in, because what we have is the footloose capital, the portfolio flows, which is opportunistic. Foreign investment inflows is declining because we need deep reforms. That deep reform has to do with institutional reform. It has to do with changing, recalibrating our business environment governance framework, right? If I'm an investor and I want to bring money into Nigeria for green investment, I want to start a new business in Nigeria, and I have to buy a land in maybe, let's say, Lagos or Abuja. If somebody comes and takes that land, how long is it going to take me to recover that land? And what is the probability that I'm going to recover that my business premise? This assurance, if we can't give this assurance to investors who want to start new business, because Nigeria has a lot of potential. One of the biggest markets in the global south, right? In Africa, we are top 1. So, but the issue is that now we have dealt with the issue of revenue reforms. We need to begin to deal with the issue of structural rigidities. We need to deal with the judicial system. We need to deal with the regulatory framework. We need to deal with the business environment governance, so that sustainable investment inflows will begin to come. And mind you, remember that you see FAC declining. Part of the unsaged problem, and that is part of what I've envisaged before now. When you have done some reforms, raise up your tax, the base and the net and all of that, that is very fantastic. You're going to raise your revenue. But beyond that, if you do not have sustainable growth in terms of corporate performance, in terms of household income has declined from $8,500 in 2018 to $4,500 in 2025. If you do not have these indicators improving, the possibility or the probability that your tax will keep growing is less than 50%. And so it gets stuck, because you have wrapped up within the available space for you. You need to increase the space. And to increase the space, you must increase productivity. Look at what is happening to inflation. We have productivity issue. And we now have to go back to the drawing board and begin to deal with those issues so that we'll be able to achieve our great aspirations of both growth and size of economy.
Yes, so, and honestly, sometimes we do get tired of talking about potentials. We agree, we know we have potential. So thank you so much for bringing that up again. Mr. Clement Igbanugo, economist with Financial Derivatives Company. We're all looking forward to realizing our potentials in Nigeria.
Thank you.
All right, and so when we realize those potentials, then we can also stand strong in the face of Trump tariffs and take up the opportunities. And that's where Will Ibon comes into the picture. Will, you start with President Trump and you end with President Trump. That's what's going on in the global world.
No, I'm not going to end with President Trump.
Okay.
He can't take center stage all the time.
Okay.
Yes.
All right. I agree.
So let's just start with it. President Trump said big progress was made in a meeting with Japanese officials launching formal trade talks amid ongoing tariffs. We see the big progress he posted on Truth Social without giving details. Now, Japan faces U.S. tariffs of up to 24%, including 25% on cars. Most duties are paused for 90 days, but both sides aim to strike a deal before then. Japanese Prime Minister Yoshihide Akazawa said discussions will continue, though no date is set for the next round. Meanwhile, Japan's exports rose 3.9% in March, below the 4.5% forecast and down from February's 11.4%. Shipments to the U.S. rose 3.1%, while exports to the Middle East jumped 17.1%. The data only partly reflects U.S. tariffs, with a 25% auto duty set for April. A 24% tariff is paused for 90 days, but a 10% base rate remains. Japan's trade deficit narrowed to 541.1 billion yen. Missing estimates, imports rose 2%. Trump said trade talks made big progress, but experts warn Japan's export power is fading as China gains ground. Now, China has shifted away from matching U.S. tariffs, calling further hikes meaningless, and is now targeting American services and companies. Key measures include halting Boeing jet deliveries, restricting rare earth mineral exports, expanding its unreliable entity list, probing U.S. firms like Google and DuPont, urging citizens to avoid U.S. travel and education. And the U.S. envoy enjoys a $32 billion services surplus with China, mostly from tourism, education, and consulting. China's latest steps could hit these sectors hard, with $24 billion in travel-related services at risk. Experts say the focus is shifting from goods to systemic decoupling, affecting everything from supply chains to people-to-people ties. Now, as Chinese President Xi Jinping visits Cambodia, the country looks for increased financial backing, particularly for infrastructure projects. Cambodia hopes China will fund the 180-kilometer Funan Techno Canal, which would reduce reliance on Vietnamese ports. China has not yet committed to the canal project, despite Cambodia's expectations. Xi's visit comes amid tensions with the U.S., where Cambodia faces high tariffs on its clothing and footwear exports. Xi has urged Cambodia to oppose hegemonism and protectionism. Now we move to the EU, where the EU Central Bank is expected to cut interest rates for the third time this year, with markets pricing in a 94% chance of a 0.25% cut to bring the deposit rate to 2.25%. The move comes amid weak Eurozone growth, easing inflation below 3%, and rising global tariff tensions. The ECB has already signaled a shift in March, saying policy was becoming meaningfully less restrictive. Recent trade disruptions have renewed expectations of further easing, despite earlier speculation of a possible pause. Now to Germany. Producer prices have recorded a slight decline for March, according to the Federal Statistics Office. Prices fell by 0.2% compared to the same period last year, surprising analysts who had anticipated a 0.4% increase. Now, this marks a shift in the trend, as previous months had seen rising prices. Now to energy. BP set for a tense AGM as investors, led by Legal and General, prepare to oppose Chair Elge Land's re-election in protest over the firm's reversal of its green strategy. The energy giants have scaled back renewable spending to refocus on oil and gas, aiming to rebuild investor confidence. While analysts welcome the shift, some shareholders criticize the lack of a vote on the new direction and concerns over corporate governance. And the vote is seen as a key signal of discontent amid growing pressure on BP's climate commitments. Now, Taiwanese chip giant TSMC's first quarter profits surged 60% to 361.6 billion new Taiwan dollars, beating expectations on strong AI chip demand. Revenue rose 42% to 839.3 billion new Taiwan dollars, with advanced chips making up to 73% of wafer sales. But U.S. trade tensions pose risk. President Trump's tariffs on Taiwan and export controls on NVIDIA and AMD, key TSM's clients, could tighten further. Now, still staying on artificial intelligence, the largest annual tech summit, GITEX, took place this week in Marrakesh, Morocco, where tech leaders, startups, investors, and public sector pioneers from over 130 countries gathered in Morocco's Red City. Our correspondent, Juliana Lainka, is there firsthand and brings The updates. Juliana, good morning. GITEX Africa 2025 has been described as a celebration of Africa's tech rise, not as the next big thing, but the big thing. From where you're standing, Juliana, what makes this year's event feel so significant?
Good morning, Will. It's been a significant event because for the past 3 days we've been shielded away from Trump news, actually, which has been very refreshing, not hearing about tariffs, but actually hearing about possibility and kind of fostering a pan-African digital economy which promotes South-South cooperation. As to be expected, Nigeria is right at the center of that. And what we are hoping is that lots of the kind of strategic influence that Morocco has been able to achieve over the past few days will be coming to Lagos, will be coming to Abuja in the next couple of months. And, you know, this is great for technology, innovation, AI, our young tech-savvy individuals in the country and on the continent being able to kind of foster this innovative ecosystem. So it's been absolutely fantastic. And of course, I know our viewers have been watching the reports that I've been sending to the program, and we will be having I would say, a conclusion of all of the events on Friday's Channels Business Global.
Okay, so but with over 130 countries represented here, it's clear the world is watching. What has the global turnout been like, and what does it tell us about Africa's innovation space? How is it being perceived internationally?
I think it's been really exciting. As I said, over the past 3 days, we've heard nothing about Donald Trump, really, here in Marrakesh. Everything has been about, you know, innovation and excitement. I think, you know, GITEX Africa has been going for 3 years now. The actual GITEX brand is decades old, but the Africa brand hasn't been going for too long. Morocco appears to be the epicenter of bringing together all of these African startups, and it was absolutely jam-packed. You had over 45,000 participants and 1,400 exhibitors, and we had lots of startups from Nigeria, and they were all really, really excited. I think a lot of our tech has of course been focused on fintech, because we know that finance is so important, but there's so much more than that. Edutech, for example, appeared to take center stage for the Nigeria delegation. So it was really exciting. I think now for a lot of our startups, we just want to make sure in Nigeria we're on a level playing field. You know, the event was huge in Marrakesh, and we hope we can replicate that in Abuja and Lagos. But to do that successfully, we need power, Will. We need the infrastructure right. We need people to be able to come to Nigeria and feel safe, feel like it is a place that they can do business, and they want to invest and do funding. Very hopeful, very optimistic, and we just hope that we are going to be able to replicate what was seen in Marrakesh this week.
And definitely, Juliana, we know that from what you said, it's been a real buzz, and there's been optimism and resilience there, especially when it comes to gender inclusion in the tech space.
Right.
We're hoping that this, you know, translates to greater heights for Africa, taking the spot in Africa's artificial intelligence movement. Thank you so much, Juliana Olaika, for sharing your perspective.
Thanks, Will.
So that's it, Ini, basically.
Yeah, I wish I was one talking to Juliana, because she's telling us that we're expecting the bus to come to Abuja. It would be so nice to have Juliana in the studio one of these days. Don't you think so?
Yes, it would be nice for her to be able to come.
So Juliana, if you are in Morocco, then you should be in Abuja when GITEX comes to Abuja, and we want to have you in the studio.
Oh, yes, that would be great.
We'll protest that.
Yes, and then we'll bring the tech and all the robots in here, so we'll have that.
We can have them at the venue of the event. Let's give us our Juliana. Keep the text. Keep the text in
I think I want to see artificial intelligence, you know, please.
Take your job, do what you're doing.
No, just.
But you know you can be cloned.
I can.
We have to check if you're cloned.
I can be cloned, but the clone can't be me.
Okay. All right. All right, we'll talk to you later. Well, that's about it on the program. Just to tell you that the NGX closed negative yesterday, down 0.68%. And, well, we're still on 103,000, unfortunately. 65 trillion is the market cap, but let me just keep that. And we'll give you fresh numbers, intraday numbers. Hopefully there'll be recovery intraday. We will be here. I'll also be here for another 55 minutes of a business journey. That'll be Business Incorporated at 1 p.m. Talk to you then. I'm Amy John Mekwa.